Welcome back to another episode of Sunday Funday, where we review our Webull Dividend Portfolio Spreadsheet. In this video, we're going to review our deposits, our purchases, and our dividends received. I did miss last month, so this will be a review of June and July, or July and August. I think it's July and August. It'll be July and August we're going to go over. Currently, we are up $989. It was pretty neat because I think we were up at $1,200 at one point since the last video. And we have a total return of 24.96%, which is pretty good. As far as our purchases go, we bought 1 share of Unilever. We bought 4 shares of Verizon. We bought 2 more shares of Sunoco. We also bought 5 more shares of Independent Bank. We were able to add, what was that, 4 shares of QYLD with our dividend money. Okay, and then this month we did sell a few stocks. I decided to sell Ford. So we made a total profit of $36.53. We also sold Foot Locker. We made $86.68 on that. And then I also sold B&G Foods for a total profit of $58.80. And then I also sold out of 3M. And I made $33.45 on that. I have 3M in a different account, so I decided I didn't need the 1 share because I wasn't going to be able to add a full share of 3M into this account probably ever again. So I decided to sell it. I ended up, in the other account, I had some extra money, so I ended up buying that same share in the other account. So I technically still own it. The cost is a little different on it. But so basically with Ford and B&G Foods, those were actually the 2 stocks I had the best gains or best total return on. So it may be a chance where I just cut the flowers and I'm going to water the weeds. But I just felt like currently I can't see Ford bringing the dividend back because I bought it because it was a dividend. That was my dividend money. Those were my first little bit of dividend money. I had $20.69 worth of dividend money in there. And I feel pretty good because I was able to basically double and a half it. This was actually a little higher. I sold it for $13.01. So it's come down a little bit. But so I was able to take basically $20 and turn it into $50. So I was pretty happy with that. As far as B&G Foods, I bought that when it was $15.92 back when the health situation started. The dividend yield and everything and the earnings, I've decided I'm not real sure on how to value the company for that, but I feel like there's a lot of short interest and stuff, and there's a lot of things that I'm not real sure of, but it just seems like the dividend's super high. So I'm just going to get out of it because I'm not going to, as much as I don't want to sell it because it's stuff we buy the Ortega taco stuff, and then the Green Giant is another one of the companies that they own, or products that they own. But I feel like I'm getting too many stocks to keep track of, and it was only $1.43. And the funny thing is, in prepping the video, I forgot why I was holding on to it for so long, because as you can see here, the current dividend yield is 6.3%, which a lot of people say that's high. The dividend's $1.90 and the earning per share is only $1.70. So that doesn't cover the dividend. Some people say the company's free cash flow will cover the dividend, but I just can't see sitting around any longer when I can start. I can put that extra, $90 somewhere else. They haven't raised their dividend, and that's one thing I really want to get into is having companies that raise their dividend. That way my dividend income will increase as the years go on, and they've basically kept it the same, and I would hate for them to cut the dividend for some reason because the yield's getting a little ridiculous, and then the price go down, and then I lose all my gains plus the dividend. But going back to why I was holding on to it for so long was, let me show you. I did the math right before this video, and I've been trying to keep my yield on cost in this column, and I didn't have it there. But when I figured it out is because I was able to purchase it so cheaply when the price had fallen during the health situation, my actual yield on cost was almost 12%. So I was getting a 12% return on my $30. Or my $40 or however much that was. Yeah, it was $31. I was getting a 12% return on $31. I was really bummed that I didn't buy more when I bought that, but as soon as I bought that, the price ended up going back up right after I bought this one share. But yeah, so I was getting a 12% return, which is really good. Plus, it was at the qualified dividend rate, so the tax rate was really low on it. But I just couldn't see holding on to those 3 shares. I can shrink down the number of holdings I have so I can keep a little better track on them. But anyway, so we did get rid of those. I'm going to clean this spreadsheet up real quick. Hopefully not goof it up too bad. Okay, so that did not screw anything up, it looks like. So that looks good. So now my charts down here are a little different, but I would like to shrink down a couple more spots. I'm thinking about selling IBM because I've got a pretty good return on that. And then maybe this Horizon I might sell just because they have not raised their dividend either. Even though that's a pretty good yield right now, my yield on cost is a little higher than that at the moment. But let's get into the dividends we received this month, because that's the whole reason we're doing this. So for the month of July, we received $3.38 from Oxford Lane, $6.36 from Federal Realty, the $1.43 from B&G Foods, $2.36 from Realty Income, $6.02 from QYLD, and $2 from Horizon. And then in August, we received $6.90 from Verizon, $6.10 from Energy Transfer, $11.56 from Sunoco, $5.25 from Independent Bank, $2.36 from Realty Income. And look at that, we got $1.50 from EPR Properties. They finally reinstated their dividend, so we can remove the yellow mark from them, as they are back to paying $1. Well, I think it's like 25 cents per share every month. So next month we'll get $1.50. That is a lot lower than what it was when I first purchased it. So hopefully we'll be able to keep track of that one a little better to see if they are still able to afford the dividend. They quit paying it for a whole year. The good thing is their earnings and stuff was higher than what their dividend rate was. So it should be well covered, but that is a monthly dividend payer. And that yield is like 6% or 5% right now. So that's a pretty good return. And then we're going to delete Ford out of here because Ford is now gone and they never actually paid us a dividend because they quit paying their dividend right after I bought them. I'll have to come in here and figure out what I'm going to do with this B&G Foods as far as keeping track of the stock or the dividend amount. But all in all, we've been investing in this account for almost 2 years now and feel like I'm getting a little bit more of a hang of it. Some of the dividends do jump around as far as like Unilever, they change their dividend like every time they pay it. It's different, but I really enjoy the thought of the dividend growth investing as far as like, say you buy 3M, they pay whatever the dividend is for the year, like say it's $1.48, and then they'll pay that for 4 payments for a whole year, and then the next year, like maybe next year you'll get $1.49 or $1.50. So that's nice that you get to hold the same number of shares, and then the following year you end up making a little bit more money. It may not seem like a lot, like a penny may not seem like a lot, but if you have multiple shares, and over multiple years, all of that stuff compounds. Plus, if the stock price goes up, your total return goes way up. Because even like this, like if you were to look at, say, Verizon, like as far as the actual stock price, my cost basis is $56.52, and the price of the stock is only $55.52, so I'm technically down $14 on paper, but because I've received dividends in a total of $18.78, I'm technically up 0.6%, so I'm still net positive on the stock. So that's good too. I mean, it's nice to see that. But as you can see, like even with Independent Bank is a good example. Like last year, Independent Bank paid 80 cents per share, and now they pay 84 cents per share. So looking back on my first couple purchases, this stock right here, this OXLC, they cut their dividend in half back when the health problem started, and so did Energy Transfer. So hopefully if their earnings per share keeps going up, hopefully they'll be able to raise their dividend back to where it was, and then let's say they put it back to where it was pre-health problem. Basically my payment amount would double, or my dividend income would double. So like for this one, I would be getting $81, and for this one, I would be getting almost $50, which would be insane. Anyways, this is Sunday Funday. This is what we did. So sorry I haven't been keeping up on the videos, and if there is anybody still watching, I'm glad you're still watching. This is fun to document our journey, and I'm hoping to be able to express more of what I've learned during this whole process, but it is a very new adventure for me as far as doing this investing thing. I've only been doing it for about 2 years outside of my 401k, and there's a lot to learn. And I did start at a bad time, kind of, but also a good time as far as making money, but I think it took a lot of the needing to know what you were doing out of it, because the stock prices were all so low that basically everything I bought went up. So I've been ahead on quite a few stocks for quite a while now, and now that the market's kind of leveled off a little bit, it makes you kind of nervous to see the price, the amount of your gains go down or even go negative again. It is definitely a different feeling. Hopefully within the next little bit, I can keep learning on more how to value the individual stocks. This is Sunday Funday. I have been trying to document 4 different accounts and kind of 4 different investing strategies. We go over our Webull Dividend portfolio, our M1 Finance Roth IRA, our Fidelity Health Savings account, and then I also have a growth portfolio with Facebook, Amazon, Netflix, Google, and Berkshire Hathaway in it. Within all of the accounts, I gotta fix this spreadsheet real quick because I deleted these 2, so hopefully I can delete that. And where's the other one? So as you can see, we have all 4 of the accounts in this one. We've invested $32,422.68. And we've done that in a little bit less than 2 years with money we normally would have spent on other things. And instead of buying other things or having car payments, I've decided to invest the money. And now that $32,000 is basically worth $38,000, almost $39,000, for a total unrealized gain of $6,374.07, which is pretty amazing if you think about it, because if you would have taken this and bought just about anything with it, it would be worth less than what you paid for it. And here, not only do we still have our $32,000, but it's now worth $6,000 more, and it's going to generate essentially $1,700 every year with us doing nothing. And hopefully every year that number will go up with dividend raises. We're technically real close to being where I wanted to be at the end of the year. I want to be able to say at the end of the year that my investment accounts is making me $5 a day. So basically we're creeping up on that. So far the dividends we've collected are essentially $3.32 every day. So that's pretty nice to see that number climb. I wanted to be at $1 a day by the end of the year, and we smoked that goal. So pretty neat to watch the value go up. It's real scary to watch it go down, but the thing I keep telling myself is you don't technically lose that money until you sell it. So I try not to sell them when I'm down. I really don't plan on selling any of these, or I didn't, but to keep track of this many stocks and stuff is quite time consuming. I mean, it probably doesn't have to be if you just bought it and forgot about it, but I'd like to be able to add to each purchase when the stock price is down or when it seems like a good deal to increase the dividend yield and all that stuff. So probably spend more time looking at it than I need to. But if you'd like to see the other update videos, make sure you subscribe, and I'll try to get the other videos out for the Roth IRA and the Fidelity Health Savings account and the growth portfolio. One thing we really have been trying to do is to keep the majority. Oh, the chart got messed up too. Is we've been trying to keep this smaller now. So we've been trying to keep most of our money in tax-sheltered accounts or tax-advantaged accounts, and we've been able to do that so far with having 3/4 of our money that we've invested inside a tax-sheltered account, which is, this one is the Roth IRA, and then the other one is our health savings account. So those are all tax shelters accounts, and then this is the Webull Dividend portfolio. in the growth portfolio. These are the only parts we'll ever have to pay tax on if we go to sell or if we receive dividends. So that's one thing you want to remember is about your account selection, and make sure you're putting your money in the tax sheltered ones first before the regular taxable accounts. Hope you enjoyed the video. If you did, give us a thumbs up. And if you want to watch other investing videos, you can check out one of the links on the screen or check out the sidebar. Thanks for watching. And before I let you go, I would like to show you this little chart that I have here of every month since we started investing in the Webull dividend portfolio. This little chart represents every month, year over year so far, of how much money we've made in dividends. So as you can see back here in January, we made very little money, a whole $1.49. And then every month as we added more shares to our account and different investments, we've got different amounts of money. But as you can see, every year so far, we've increased the number. Like last August, we only made $26.91. And then this August so far, we've made $35.67. Plus, we still have 2 more dividend payments to come in for August. But in July, you can see that we made $21.55 compared to $9 or $10.93 previously. So